morning, traders. Welcome to the morning update. This is Mark Owen, and it's the 8th of March. And we're just going to have a look at the news announcements coming out today and what happened yesterday, and any potential market movements that could be of interest for today. So, yesterday, first thing we'll notice is that Theresa May suffered her second defeat in the House of Lords. The defeat basically meant that Parliament or government has got more control over what happens in terms of the Brexit deal, taking away some of Theresa May's power. Expecting more swings today from GBP with the annual budget release. Overnight, we saw the Chinese yuan trade balance come in worse than expected. It didn't make much of a move on the Australian dollar or the Kiwi dollar. There was a little bit of a move, but nothing significant. The next main concern today will be the ADP non-farm employment change. This the job numbers coming out of the private sector. It's usually a good indication of whether we're going to see good numbers or poor numbers on the non-farm payroll on Friday. So always watch this. It can be a lead indicator to what is potentially going to happen on Friday. And then, of course, at 3:30 today, we have crude oil inventories. Watch out if you are trading Canadian dollar on an intraday basis. If you've got orders resting around 3 o'clock, cancel those orders and wait for tomorrow. Okay, let's have a look at the charts. Dollar index. Well, what we can see here was forming was potentially head and shoulders pattern. Came in, we had a little double top, it pulled back, created a new high, so momentum is to the upside here with the dollar. Then lovely price action pulling you back into the double top, and you can see that just pulling back into here. And then we've had a move off on Friday. Yesterday's day was a little bit stagnant. You can see very small. We'd like to see further momentum to the upside to continue dollar strength, and it's respecting that short-term trend line. So moving across to the euro, sorry the chart's a little bit cluttered, but what we want to look at here is this short-term triangle that has been formed here. So you can see price spiked yesterday. This is what got us into our trade. We saw this false break to the upside, and then we sold it on the way back down. Now, what we look at here is this little support level that was acting all day yesterday. It was coming in, rejecting, and finally we've got a push south of this level. Really what we need to see is a break through this low here, and then I'd expect to see the lows of 105 tested in this grey zone. So watch for this potential market. There's going to be no additional trades here for me today. We'll be waiting now to see this market move. If we don't get a break lower, you can see our positions risk off now, i.e. we've got stops at break even. And once we get a break below this low here, then we'll be looking to add into more positions. Dollar yen. Well, what we saw was a break and a push outside of the channel. It's failed now at 114 for 3 days. You can see this highlighted here in the blue box. It pulled back to test, 114.60. It pulled back to test this trend line area, and it looked like we were going to get a bit of a dollar momentum move, push back up towards test this area again. But it's been sitting in about a 60 pip range, 70 pip range the last couple of days, and you'll see this on a smaller time frame. So we need to see it break out of this really. And in order to see the dollar strength, we'd be looking for a break and close above this zone here and watch to see it push up. Alternatively, any pullback lower into the trend line or even back down to these lows will represent a decent opportunity to resume dollar strength should we get good non-farm payroll numbers. Okay, so sterling, our analysis at the weekend highlighted that we'd be looking for entries in around 123.40 up to around 24.30. So this comes down to your discretionary style of trading. This was our analysis sent out in the Investor Insight Pack. This is where we were looking to get short. Unfortunately for us, it never pulled back far enough. And then obviously with the news yesterday, sterling stuff had a setback and continue its downfall. It does look like sterling is going to come down to test the 120 areas, and then following that with seasonal patterns, what you'll see is that sterling generally forms a new low through March. Now what we've got here is we've got 4 different time periods on the seasonal pattern. We've got a 5-year, a 10-year, a 20-year, and lifetime data that we have on how seasonal patterns operate. Now the blue line you'll see is a 5-year, the orange line is a 10-year, the green line is a 20-year, and the yellow line is 41 years, because this is all the data we've got collected. And if you look here, this is March. So seasonally adjustments, you'll find that March generally finds a new low towards the early part of March, and then through March, April, and then to the beginning of May or end of April, we get pretty much the highs of the year. So this is definitely where we're going to be looking for bullish periods, regardless of what comes in terms of Brexit. You know, if we see the sterling drop and it rejects, and we get some nice commitment of trade in this signal, couple that with the seasonal pattern, we'll probably find that we might actually get a seasonal run. But obviously, we're not just going to buy and hope that the seasonal. All these factors have to fall into place. I hope that makes sense. So Aussie dollar, this was a trade we called and we put on Instagram. You'll see this, we've got a nice pullback into our analysis. Put the sweet spot for entry, we entered at 76.20, we took half profits off yesterday, and stop loss is now risk free, and next stop we're saying is 7,400. What I will be looking for here is a potential end of day entry. We've got a nice daily rejection candle coming out of our sweet spot, and we'll look to run this position further down, adding it into with an end of day entry. So let's see what happens here with Aussie dollar. Final chart of the day is going to be silver. So silver and gold have been selling off extremely nicely. The choice between silver or gold for me personally was that silver had a commitment of traders extreme signal, so we sold silver up here. We've banked half profits just around the 1770 area. Multiple reasons for taking profit here: structure, fibs, etc. We've got major confluence when we were looking at price up here when we sold. Primarily top channel. You've got structure, we've got fib, we've got price action. It was all and cot signal. It was all literally ticking the boxes. So now what we're going to look for is the dollar strength is going to come, which we would expect with a fundamental play and 3 rate hikes. We'll be looking for a retest of this 1770 area to get short and bring it back down towards the $16. So this could be the trade of the year so far. And that's it from the charts today. Sorry, there was a cocoa slide there that should have been taken out. Next thing we'd like to say is free trading event. So Saturday the 11th of March in Sweden, Stockholm at the Grand Hotel. We've got a very big audience so far. We do have limited space available, so if you are in Sweden and you would like to attend this full 3-day of training, then here is your code. Type in this URL here, which is phoenixbluestockholm.eventbrite.co.uk. Get that typed in, click enter, fill in your details, and we'll reserve your seat. Alternatively, if you don't live in Sweden and you can't make the Stockholm event and you're UK based, we do have one on Wednesday, the 15th of March in London. And again, if you'd like to register for this afternoon's trading, the URL is phoenixbluetrading.eventbrite.uk. If you do have any questions about the material presented today, my email address is mark@phoenixblue.co.uk, and general inquiries about Phoenix Blue services or client services, please email info@phoenixblue.co.uk. We look forward to seeing you at any of our events in the future, and please, if you think this information would be useful for any traders, please share it with them, like us. You know, we are growing. We'd love to help traders out. Okay, look forward to hearing from you. Bye bye.